Welcome to the Notary News Channel. This is a forum for all things notary and some things not. Please be sure to like and subscribe so that you can receive the latest notifications when videos are posted. My name is Desiree Roman Rodriguez, and I'm a subject matter expert in all things notary in the state of Illinois. I'm also an enrolled agent, credentialed by the Internal Revenue Service to prepare taxes, troubleshoot tax issues, incorporate businesses, and represent taxpayers all the way up through the U.S. Tax Court. This week on the forum, we're going to talk about the thing that's driving this year's tax season. Why are your refunds so much lower this year than in previous years? Tax season is in full swing. We are about halfway through right now, but we have been seeing so many taxpayers with refunds that are a lot lower than they've been expecting. And right now there's about six main reasons why taxpayers' refunds are as low as they are. So we're going to go through some of those reasons this year, and hopefully you will be able to understand what's going on with your refund and try to make things be different for next tax season. So let's get right to it. Our first reason why there is a drop in refunds this year. So if you're a single person, you worked, you had a W-2, you didn't make any changes, but you still saw a lower refund than in prior years, that reason is going to be, and sad to say, because of the Trump administration's tax jobs cuts that they did in 2018. We're still feeling the effects of those changes. And the biggest change that was made was the reduction of the withholdings from your payroll taxes. So to keep things simple, and please understand that these numbers are not what the actual tax brackets, tax rates, and things are. It's just so that the numbers are simple and easy to understand. So if prior to 2018, the payroll department was withholding taxes from payroll at 20 cents for every dollar. Remember, refund means that the IRS took too much money from you in taxes, and now they are refunding back to you the amount that they weren't supposed to keep. So always what happens at tax time is always going to be attributed to what you've done in the beginning of the year with your W-4 paperwork at your employer and any things that you have set up to reduce your taxes throughout the year. Now, if you have not done anything to help keep more of your money, it's all the more reason why you need to see a tax professional. Tax professionals are going to be the ones that help you to keep more of your money. So, very first reason, payroll withholdings. The payroll withholdings before 2018, and again, to keep things simple, we'll say was 20 cents for every dollar you earned went to pay your payroll taxes. Then at the end of the year, IRS said, hey, we took too much money from you. Here's your refund. Woohoo! Nice windfall. Now, after 2018, the IRS withholdings went from 20 to 10. So now they've taken less from you. So at the end of the year, the IRS says, we took just about what we were supposed to take. Here's your $100 refund. That's all we have to give you back. And the reason that was done was so that it could cut down the paperwork and the refunds and the interest that the IRS was paying by holding on to taxpayers' refunds in such large amounts. So now they're taking less from you, so that's less that you are getting back. Now, how do you change that? Now, most people, they're fine with getting a little bit back. They feel like, I don't want to give the government a tax-free loan. I want to use my money during the year how I want to use it. I'm fine with a small refund. And that is perfectly okay. But for those of you that are used to getting a larger refund, and you're like, hey, I'm not doing anything with that money anyway, go ahead and take it. I'd rather get a nice big lump sum at the end of the year. Well, then the change you are going to want to make is with your W-4. Now, your W-4 is going to look like this. This is your W-4. And when you are filling out your information and you're putting single and you're putting zero, it's not taking as much money as it was from you before. So if you want to go back to having the same amount of taxes withheld, you're going to have to go to section 4 and line C, where it says extra withholding. You're going to have to add in here the extra amount you want withheld from your paycheck. So for example, if you normally get an extra $500 at the end of the year, it pretty much means you had about an extra $20 a paycheck being held from your taxes. So you would have kept those extra $20. Now, do you normally see that and you get your paycheck and it's, $1,100 and there's an extra $20? Do you really notice that? Not really. Probably spent it on Starbucks or at an afternoon lunch or, half a tank of gas. So you're not really seeing that $20 when you're getting it paycheck to paycheck. But that being withheld by the IRS with your payroll taxes, at the end of the year, they're saying, hey, you know what? We didn't need this. This is a refund back to you. All of a sudden, those $20 added up to $520. Now you got a nice big refund of $500. So that is how you're gonna need to make that adjustment if you are single and not having any changes and you just want more of a bigger refund in your paycheck. And then we're already in February, so 2 months have already passed by. So if you want to make that change, you need to do it right away. The second item of why people's refunds are lower this year is going to be the advanced child tax credit payments. If you were one of the recipients of that extra payment from July through December, that was an advance on your refund money. Now, I did a video about this before, letting people know to opt out of receiving those if you wanted to get your full refund at the end of the year. But if you did not opt out and you received those payments, then essentially you already received part of your refund. So your refund is lower because you got part of it from July through December. Now, one of the big hiccups about this is parents who are divorced or separated and who alternate years of claiming children. That is a big problem this year because one parent received the advanced child tax credit because they claimed the child on the taxes the year before. But the parent who's claiming the child this year did not receive those payments, so they are getting their payments in full. And the parent who doesn't get to claim the child this year now owes that money back. You have to pay it back. You collected those payments under the pretense that you were going to be claiming a child at the end of the year. And now it's not your year to claim the child. You collected payments for a child that you're not claiming. You have to pay it back. So paying it back means a reduction in your refund. Now, the third reason why taxpayers' refunds are lower this year is because you collected unemployment. Unemployment totals this year have been the highest I have ever seen. And that's because of the stimulus payments that were added all the way up through September. So if you collected unemployment typically only withhold taxes at 10%. And if you received unemployment and you were one of the ones that got $25,000, $27,000, $30,000 in unemployment and you're single, you're only getting a break of the standard deduction, $12,500, which means the other $12,500 you now have to pay tax on. And if you only withheld 10%, you are in a 12% tax bracket, which means you're short 2% of your tax that was withheld from your unemployment. So you're going to have to pay that back. So that means reduced refund. Now, if you were one of the taxpayers that worked, had unemployment for half of the year and then worked the other half of the year, now you really have a lot more income. Your income's probably kicked you to the 22% tax bracket and you only withheld 10% for your unemployment. One thing that single taxpayers have to understand is that, unfortunately, as single taxpayers, you run through the tax bracket increases higher than any other tax filing status. Married filing joint stays in the lower tax rates the longest. Head of household a little bit longer than single, but single, you move through those tax brackets like nobody's business. So at 9,000, that stops the 10. That's where 10% tax stops. So most people are making more than $9,000. So you're not in a 10% tax bracket. You're in the 12%. You move to the 12% tax bracket. As a single person, you are in the 12% tax bracket only up to $40,000. After $40,000, you move to 22%. For a married couple, they are in the 12% tax bracket up until they hit $80,000. So they're in the tax bracket for 12% a lot longer than a single person. So you will move through the tax brackets faster with the income that you're earning. So if you earn 25,000 in unemployment and then you went and worked and made 25,000, now you've made 50,000. The first 12,000 gets deducted. You're still leaving that 38,000. You're okay still being in the 12% tax bracket, but you have to understand you only withheld 10% from your unemployment. So you are going to be short, and that means lower refund. The fourth item as to why people are seeing a lower refund is because you made more money. And making more money moves you to the next tax brackets. And if you didn't do anything to adjust your withholdings, you're going to be short. And so, for example, I had a customer who had a $17,000 refund last year, and this year his refund went down to $7,000. And so of course he's freaking out saying, why do I have such a low refund? Well, it's because one, he received advanced child tax credits, so he received part of his refund July through December, so he already received that money. And the next thing was he jumped 2 tax brackets up to 24% from 12% the year before. So he's still having taxes withheld between 10 and 12% when his tax rate is 22%. So that's 10% of taxes that you did not have withheld from your wages that now you're short. So where does the money come from? Out of whatever refund you were going to get. And unfortunately, some taxpayers are finding themselves owing this year because they took that credit, because they had the unemployment, and then because they made more money. Remember, for 2020, the first 10,000 of unemployment was not taxed. That's not the case this year. Normally all unemployment income is taxable income. That 10,000 waiving of the taxes was just for 2020's tax season. It does not apply this year. All of your unemployment is taxable this year. And the next reason why people are seeing lower refunds is their 401k withdrawals that they made in 2020. If you opted to spread that tax burden over the next 3 years, that tax is now come due this year. So let's just say, for example, you took $10,000 out of your 401k and you said, oh, I don't want to pay it all right now. I want to spread it over the 3 years. Fine. That's what your tax preparer did. So you paid $3,300 last year. Guess what? $3,300 comes due this year. So you started this tax season $3,300 in the hole. So you had to at least have had enough taxes withheld from your paycheck to cover that $3,300. But if you only had tax withheld to cover what you earned, now you're short $3,300 in tax. So that's been a reason why taxpayers have either owing or seeing a reduction in their refunds. And the very last reason why, number 6, the very last reason why most people are seeing a reduction in their refunds is because they are wheeling and dealing in cryptocurrency, Bitcoin, and Acorn, and Robinhood investments. Those investments are doing wonderful. Taxpayers are coming in with these huge investment gains on their tax returns, and that's fantastic. It is a great way to earn passive income. The downside to that is you have to pay tax on any gains. Whether you take the money out of the account or not, you still have to pay the tax on those gains. So if you are not setting aside the money to pay the taxes on those gains, that's coming out of your refund, or you're finding that you owe. I had another customer who had $8,000 in investment gains this year. Fantastic. He went from earning 3,000 in gains last year to 8,000 this year. So that's $5,000 more he got in gains. Fantastic. The downside was he didn't set aside money to pay the taxes, and that $8,000 boosted him to the next tax level. Where he was in 12% tax level, that $8,000 took him to the 22%. So now you're paying 22% taxes on $8,000, and you did not account for that tax. So that is now reducing your refund or putting you in a position to owe. What you have to understand as a taxpayer is, if you are going to be doing all these things to diversify your portfolio and have different ways of generating revenue, you have to account for the tax liabilities. And the increase in the income bumps you to the next tax level, and you have to account for that as well. And a lot of taxpayers are not doing that. They don't understand it. A lot of people aren't into dealing with math and numbers, and that gives them a headache, and it's not something they want to do. So I always tell people, if you are a single W-2 and you want to self-prepare your taxes, absolutely have at it. It's simple. You can figure it out. It's easy to do. But once you start dibbing and dabbing in all these other ways of generating income, and you're moving tax brackets, you're single, you don't have any itemized deductions, you're going to want to see a tax professional to help you navigate your taxable income. And there are many ways for you to reduce your taxable income, especially if you're single and you don't own a home. There are ways to reduce your taxable income. But you need to be able to speak to somebody that knows about it and knows how to help you maximize your deductions to get you back the biggest refund that you can possibly get. Now, if you have questions about your particular situation, feel free to post them in the comments below. Or if you have a question that you don't kind of want out in the forum and you just want to have a little bit more private, feel free to send an email to info@DeZalBusiness.com. So thank you so much for watching, and have a great day.